Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Well, good morning, good afternoon. Welcome to Develop Your Edge with Anthony Crudele. I'll be the co-host, Tom Schneider, CMT with NinjaTrader. And as it is always my pleasure when we do this show, it is great to welcome back to the show Anthony Crudele, star of the show. Welcome, Anthony. How you doing today?
I'm doing great, Tom. Great to be with you. Excited for today's conversation. And we're going to be focusing on when I look for short setups in the E-mini NASDAQ futures. Of course, there's a micro NASDAQ futures as well. And when we get into it today, and why is this really focused on just one single product like the micro NASDAQ or the E-mini NASDAQ? And I think when you look at futures products, you really have to understand that these markets have personalities. And so one of the things this year that I'm really going to hone in on and focus on is specific markets, specific personalities. And I don't trade this strategy that I'm going to be showing you today in the NASDAQ in the 10-year. I mean, it's very similar, but my execution is going to be a little bit different. And it's because the 10-year just doesn't have the volatility on a regular basis like the NASDAQ. And so you have to account for that. One of the things I think is so important, especially as we have a lot of new traders watching this, is develop a relationship with the market. Understand the personality of that market, because some markets move really fast and some markets don't, right? Some markets have really wide ranges, some markets don't. I mean, there's different nuances. And I go back to my mentors who used to always talk about context and nuance. And so today, that's what I'm going to focus on. I'm going to focus on the context of the situation, market environment, and then the little nuances that the NASDAQ has that's, I think, a little bit different than the other indexes.
Yeah, that's great. I mean, we talk about some of the differences, but we don't always go into why the differences are there. We can surmise, and we notice that three indices are performing one way and one goes the other way, or a mix of that. So it'd be really interesting to hear your take on why the NASDAQ does what it does. I do want to remind everybody who's watching that you can drop questions for Anthony in the chat. We have a chat room at ninjatrader.com/events. Just hit the play button, put a handle in. I'll be monitoring an internal document we have where Mission Control is going to push us any questions you have for Anthony about this topic, or maybe some other topics from previous shows. But just want to let everybody know the chat room is open for questions for Anthony. But, let's get right into it. I can't wait to hear what you have to say, Anthony.
Yeah, and to highlight the questions, I was the guy back on the trading floor when I was there, and I was asking everybody all sorts of questions. There are no dumb questions, and I look forward to any question that you have out there for me. So if you have any questions, don't hesitate to put them in there. So let's start off with really my rules. I keep a little book with me, and it really talks about each market and how I'm going to approach it. And, I'm constantly really tweaking this. I wouldn't say constant. It's not happening on a day-to-day basis. It's happening really on a month-by-month, year-over-year basis. But there are some simple things in here that when I look at the E-mini NASDAQ that I'm very conscious of when I come in and step in and look at the day. The first thing I want to talk about is market environment. There are only three environments that I look for to short the NASDAQ. That's either mean reversion, which I talk about a lot here. We're going to show you what that looks like. That is a market environment. Range expansion lower, or I look for shorts in NASDAQ in consolidation periods. That's it. I never, ever look at shorts, consider shorts in range expansion higher, especially in the NASDAQ, right? If there's any market that I do not even consider it, it would be this one. I think you've all probably gotten a really decent education even if you're new to trading futures, how much that NASDAQ can go in one direction, especially higher. So it's one of those things where you got to be very careful of fading it. And that's why I want to focus on this today. Other notes that I have, and it's similar in all of these markets that I follow, multiple confirmations. One of the keys is when you're looking at a market that you're trying to short. And I think that when you're trying to short futures, because one of the things that's great about futures is the ease of access of being short, but it's also, I think, a detriment to a lot of new traders because you can come in and get short and you're going against really the grain. The markets overall are meant to go higher, whether you want to believe that or not. When I started, the S&P was at 600. It's at 40 something hundred. I wish I just bought the S&P and held it, but that's a different story, a different show. But ultimately, they're meant to go higher. So anytime you're looking at short, one thing I'm always really conscious of is multiple confirmations. Make sure that that short is showing me more than one look, right? Not just jumping in at resistance. Quick on, quick off with trailers. That's something that I look at in the NASDAQ, especially because with NASDAQ, I try to spread them out a little bit, my offers. And then when I get in, I try to rotate out of it as soon as possible, get a trailer on, and then try to just, work my stop and let that thing run if it can, right? It's very hard for me to sit in a very large position in the NASDAQ, especially in some of these market conditions, because most likely they're going to shake me out and trigger my stop, right? I mean, the slippage is so much greater in the NASDAQ than it is in the S&P. Price is not as important. So therefore, you want to try to rotate to a smaller position as quickly as you can. I always look at it as a rule of three. I've been doing this for 20 something years with the rule of three. I think that if you're just trading one lots, it's really difficult because you can't really scale in and scale out. You're held by one price in, one price out. But with three, if you break them down into three, you are able to sell one, sell one, sell one, or sell two, sell two, sell two. And then when they rotate, you rotate out of two, and then keep your trailer. So I think that that's an important aspect, especially in the NASDAQ versus like an S&P or like a 10-year or some grain markets where you can really be a lot more aggressive at a single price, because in those markets, price matters more than it does in the NASDAQ. Really look for extremes with NASDAQ because you don't think that they're going to get there, even if you want to be short, and a lot of times they do. It's going to depend on market environment. And make sure you keep an eye on cumulative delta. Order flow is so key. I know that NASDAQ doesn't have the order flow that you're going to see in the E-mini S&P, but the NASDAQ still is going to give you some clues with order flow. I think it's extremely important to watch. I do not like days to be shorting NASDAQ, even if it fits into all this other criteria, if they're building cumulative delta to the upside, because those are the days where you could just get blasted and it could, the market could just be building against you. So you have to be very cautious of that. And so cumulative delta is something that we've talked about a ton on this show, but you have to keep an eye on it, even in the NASDAQ, not just the S&P. And so that is the basic rules that I have before we even look at a chart. And I don't know if you want to discuss that, Tom, but to me, that's where I come in mindset-wise before I even look at the environment.
No, I think it's great. And, as you were talking about the rule of three, I think that's so key. Rule of three really not being about three lots, right? It's really about three groups. And you mentioned the micros. So you could actually substitute three groups of three micros for almost one regular and achieve what you were trying to do, right? Which is scale in, scale out of a trade. So rules of threes is not really three lots, it's three positions. I think that's really cool.
Yeah, if there's any market that I would highly recommend scales in, it would be the NASDAQ over any other market. Russell probably would be second. S&P, I'm definitely a lot more all in a closer, tighter range, just because, once again, I think that price really matters. Look at the market personality. The NASDAQ tends to find prices you never thought they'd find. Good and bad for you. So that's why I tend to really be a scaler in the NASDAQ. So let's take a look at the chart. And I talked about market environment. Three market environments that I look at: mean reversion, back into primary trend, which in this particular case, mean reversion will be from a bullish trend, range expansion into a mean reversion. Okay, we would look at consolidation or range expansion lower. Now, it's been quite some time since we've had a range expansion lower in NASDAQ. Honestly, it's probably been about a year, maybe even longer on a daily chart. And so here we have the daily chart, and what you look for is, and some of you, this may be new, some of this might be repetitive, but it's important because this is really the key for me understanding how I want to step in and day trade the NASDAQ. In this particular situation, you see anytime the mouth of the Bollinger Bands are opening up and the market's going higher, simple 5-day moving average, that is the potential for range expansion higher. I do not even look at shorts. I just go, whatever. I don't care how far that NASDAQ goes. It's when the portfolio does well, where all your NASDAQ stocks that you're holding in your long-term are doing well, and you're not coming in and shorting futures against it. So to me, that's extremely important. That's a no-no. You do not want to short NASDAQ ever, in my opinion, above 5-day moving average, grinding higher with Bollinger Bands moving outward. That's just like rule number one for me. That's the no scenario. When you can't start to look at it is Bollinger Bands start to revert back in, you get below the 5-day moving average. Now you are in what I consider mean reversion. Now, that doesn't mean bearish trend. That just means mean reversion. It means that the market is finally now kind of tapped out and said, maybe we're done going higher. Maybe we start to rotate back lower. So you're looking at rotation. So right away in your mind, when you look at the NASDAQ, you're going to say, okay, we could be rotating lower. Now let me go and take a look at my shorter term stuff. And if I start to get some proof through these other things I've talked about, I'll step in and look at short and NASDAQ. Next scenario we look at is consolidation, which is what we've been in the last probably 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, where we got back above the 5-day moving average, but we're kind of chopping around the 5-day. It's just kind of in between, the Bollinger Bands, and the top and bottom Bollinger Bands are flat. This is really the beauty of using a Bollinger Band because it helps you understand market environment. If the Bollinger Bands are just flat, you're most likely just in consolidation. It doesn't matter how much volatility you have within that movement intraday, and you're like, oh, we're going to rip higher. Oh, no, we're going to rip lower. You're never going to really pick it perfectly and know when that's ultimately going to happen. I mean, yesterday, you probably had a lot of people thinking this thing's going to keep going lower. And then here we are right back up to the weekly highs. And it's like, okay, but when you look at the Bollinger Bands, it's telling you consolidation, which means two-way tape. And if it's a two-way tape, on multiple confirmations, with extremes, with cumulative delta, I have the potential to look for a short scenario in NASDAQ. Now, it's going to depend on what's going on in the short term. So let's take a look here at the short-term chart. So now we know right now, currently, we are in range consolidation, right? That changes if we start to push higher, close above the 5-day, and the top Bollinger Band starts to push higher, which could happen today. I don't know. We'll see how the day goes, but that's when it starts to turn into a no again. But what I want to do is I want to go back this year, and I want to go back and show you guys some scenarios that make a lot of sense when I look at the charts. Now, I wasn't taking these trades. I really haven't been doing much of any NASDAQ so far this year, just because I've been focusing more on the S&P, but I went back and did some homework, and I was looking at just what the NASDAQ was doing. And I keep this in my playbook, and I look to see if we get back in that either mean reversion or consolidation type scenario. I have examples of what type of days have worked. And this is where we go back to my 3-minute opening range, which is going to be, this is a 3-minute chart, regular trading hours. We have order flow, cumulative delta, we've got RSI, and we also have anchored VWAP with 3 standard deviation lines. Okay, these are the indicators. I've done a ton of shows on Develop Your Edge. And what I'm looking for is anytime that the market environment on the daily tells me that I can be short, then I go in and I'll use this to help me execute that strategy. This on its own is not my strategy, right? I mean, this is such an important aspect of what I've done as a trader throughout my career, is that the short-term charts for what I do and the way that I approach markets is secondary to what the primary trend of the market is, the primary market environment. Because I want to be on the side of the market or not be on the side of the market, either where I'm going to get the majority of the strong flows, we'll call it, or I'm going to get strong reactions, versus fading where I think the primary market is going. And as a short-term trader, why do I want to step in and fade that? I think one of the things that's so important to understand, and this was really key in my success as a trader, was find days where you just know not to trade. Because pretty much every day we as traders feel like we find an edge where there's an opportunity, right? Because that's what we do, right? We see patterns, we see nuance, we look at indicators, and we think that there's an opportunity to make money. I totally get that. I'm built like that too, but you have to know what direction of the market you most likely want to stay away from, because that to me will actually add to your P&L without you having to make more money. And that's such an important aspect of just your growth as a trader. So when you look at the NASDAQ, go back this year, so far this year, every scenario that I've showed you that we can be short in, it's either consolidation or mean reversion. We don't have range expansion lower. That's not the case. But 2 out of the 3 market environments we've been in. So let's look for extremes. Let's look for multiple confirmations. Let's look for cumulative delta to see what happens. And this is actually my favorite setup. And this is something that I've put in my playbook where I will look for this scenario again and again and again this year, as long as we're in consolidation. Because to me, this is actually a very interesting look. You have an opening range low, basically, where the market opens up, goes higher. The red lines is the opening 3-minute high, opening 3-minute low. VWAP goes higher. We start pushing on higher extremes of standard deviation bands, 2 standard deviation, 3 standard deviation bands, okay? We come off of a day where we're pretty overbought on the RSI. You can see that there. And then you look to see what cumulative delta is. This is really like the one thing I put in my playbook for this year when I say, if I see a day like this in the NASDAQ again, this is a day where we could probably close on the low again. So this is like an ace setup for me, where you see this here, you try to go higher, and delta's building short. Just cannot go up. Right? They're trying to go higher, getting to extremes, 2, 3 standard deviations, pushing the limits, making the longs feel like they're winning, when in reality, all that the order flow is telling you, we're selling this rally. We're selling this rally. And what's interesting is that you have the VWAP that never gets inside the opening range. And I've talked about this. This is key. Anytime I have a VWAP that's stuck in opening range, most likely 2-way tape, and I can fade the extreme. Right? And so the extremes are the 2 and 3 standard deviations. So in this particular instance, you look at this day, if I'm just putting stops outside of 3 standard deviation, I am trying to get short and just keep rotating and staying short, and eventually the market closed on the low. Every time that the market tried to build higher back above the VWAP, even though the VWAP was within the 3-minute opening range, anytime we got to a 1 or near a 2 standard deviation, sellers came in. You could just see it with cumulative delta. They tried to buy it, and it just did not work. And ultimately, cumulative delta on the day closed on the low. And that to me is like, when you think about building a playbook and you think about scenarios, these are the days where I come in, and if I see this day happen again this year in a consolidation or a mean reversion period in NASDAQ, I will be short full positions, and I will try to rotate and just keep staying short, because I've got the proof from the background, right? It's happened before. Like you look at these days where you could see, I'll just move these opening range highs and lows, and you could see, actually that was just a half day. When you look here, you don't want to short it now. Once again, even though we're in the context of the other things I talked about, because the VWAP's above the 3-minute opening range. If it's above the 3-minute opening range, I'm not short. It's just no, I can't get short. VWAP has to stay within the 3-minute opening range or below it. So you just keep going back and, you're looking for scenarios. Let's look at this scenario here. Same thing. I don't need to draw a line. You can see VWAP gets above it. Here you might have got knocked around a little bit, maybe a little bit of a rotation you made, which goes back to why I said quick on, quick off rotations with trailers. Because once the NASDAQ gets above that opening 3-minute high with the VWAP, I can't be short anymore. And look at the rest of the day, we rallied, you get smoked. Right? And so when you come back here, and I'm just going through a few more, just cycling through these to give you guys looks. When you look here, here's another scenario that gave me a lot of rotations. I didn't take this trades, but just understanding of when I knew to all of a sudden stop doing it. So this is an interesting day because you had the market open up higher, rotate lower, right? And I always say with NASDAQ, this is why I like standard deviation bands. When you get to extremes, I talked about this in my notes. With S&P, I might be selling right at VWAP a lot, right? With NASDAQ, it tends to get to 1 or 2 standard deviations a lot. And so I almost only look, even if I want to be short, at a 1 or 2 standard deviation above VWAP, because those that tried to sell VWAP are most likely getting squeezed, and I'm getting that little kind of that edge on the edges, we'll call it, right? And so to me, that's why I look for those rotations off. And you can see cumulative delta was consistently selling around these standard deviation lines. But then ultimately what started to happen was cumulative delta starts to build. Okay, it starts to build higher cumulative delta on the high of the day. You see this right here, how the cumulative delta is building up with the market, explodes higher. VWAP, now mind you, you still maybe looked at a short here. I mean, if you were really looking for a quick rotation, but ultimately I said you have to watch VWAP or delta, because if it's building against you, I don't really care that the VWAP's still within the opening range, because their buyers are there and they're trying to build on the day. And eventually VWAP gets above it, right? It gets above the opening 3 minute. This one's an easy one to look at because, okay, opening range is the high. You know, you see this scenario. Like I said, we've been in a market environment where it's a two-way tape all year in NASDAQ. So I'm just going back to the whole year. VWAP gets below opening range. Cumulative delta stays negative. I still go back to, when do I look for shorts? I look for shorts above VWAP's 1 or 2 standard deviations. The reason is because I look for extremes in NASDAQ versus S&P or other markets. It's a little different because I might be selling into breaks, but the only way I would sell into a break in the NASDAQ is if I have a scenario where we're range expansion lower, and I'm really confident that the trend is bearish on the daily, then I could sell into breaks. But if that's not the case, I am not selling 1 or 2 standard deviations and lower in NASDAQ, because I have to be a lot pickier. I like the squeezes in the NASDAQ to rotate above these areas. And I go back and look, and cumulative delta and overbought in here, like this area is not the cleanest, but nonetheless, I wouldn't have gotten smoked here. I may not have made a lot of money. I may have made a little or lost a little depending on how I executed. But ultimately, if I wait for this area, I'm much better off getting short than I was down in here, just trying to be short NASDAQ. You know, it took all day, but ultimately that's what you look for. And I guess I'm trying to paint a picture here and understand this is why I put these things in play before the day even begins. Because I'm going to go back and read the list again before we bring Tom in. 3 market environments. So far, the NASDAQ has been in 2 of them, mean reversion and consolidation. I can be short. Cumulative delta is key. Watch it. Only look at extremes in NASDAQ, Anthony. Don't be the guy who's selling into the hole, getting squeezed higher, and then you want to be short, and then you lose on that too. Quick on, quick off. Rule of 3. Try to get some on, try to get to a trailer, manage your risk. Multiple confirmations. Make sure maybe you've got an overbought RSI, maybe you've got to a 3 standard deviation or 2 standard deviation or 1 standard deviation, and make sure you watch that cumulative delta, which I've already discussed. And this helps me become a better executor in that direction of the NASDAQ, period.
No, those are great rules. Those are great, things to remember when you start the day. Curious in this day though, Anthony, when you break below that, and I'm going to go back to the beginning of the day, because I think our bias here, this was when? This was the 11th, so this was a week ago. I think we were in a consolidation rate in that time frame, right? We were consolidating. Would you consider that consolidating? Yeah. Right? Because the Bollinger Bands they're not expanding, they're not contracting, they're just kind of going sideways. So it is two-way tape, but when you break down in that beginning of the day, right? I mean, it's an almost immediate break. The VWAP breaks out of that 3-minute range, and it's not a slow break, right? It's kind of stark, right? It's kind of steep. So right around that time, are you looking for a pullback to the VWAP, or are you looking for more extremes? Are you waiting till the end of the not the end of the day, but are you waiting till the afternoon to get above that 1 standard deviation band before you go short?
Multiple confirmations. So it goes back to it. This particular instance, I'm saying, okay, VWAP's below opening range. I want to start looking for shorts. Go back to my rules for NASDAQ. Extremes, multiple confirmations. Watch cumulative delta. Cumulative delta to me was not necessarily steadily growing where it was just getting buried. It kind of made this low here and just kind of consolidated near the bottom, and you're oversold. Why do I want to sell an oversold NASDAQ on a 1 standard deviation? My stop's too wide. So I look for the extreme. Here's the one thing that I look at. If I'm really picky about my trades, like when it finally gets there, I'll allocate a majority of my day risk in this particular instance because I waited for it. What do I mean by that? So let's just say that some of you have $500 of risk per day. Some of you risk 150 per trade. That's only 450. I understand that. But let's just say that you're looking for 3 trades a day where you risk 150 bucks, right? And your risk is 500. Well, what I'll do is when it gets up to that look where I'm finally overbought in the RSI, where finally see cumulative delta, a little bit of a good response here, multiple confirmations, 1 standard deviation above the VWAP, I step in and get in relatively aggressive short here. And you actually had a pretty decent pullback, probably a 50 points in the NASDAQ, somewhere like that. Well, I'll allocate 2/3, if not maybe 3/4 of my daily risk in this particular instance. And so I'll put my stop a little bit wider and I'll be able to add some additional contracts. Remember, there's micros for this as well. And I'll try and rotate out of this trade for a scalp. Versus me, death by 1,000 cuts, trying to short an oversold NASDAQ with cumulative delta that's really not pushing lower.
Right.
I think that's the mistake that most traders make. Is that you want to be short and you're afraid this day is going to get away from you. But I go back to this. This is the nuance of the NASDAQ. The NASDAQ comes back, man. The NASDAQ does things that you cannot believe. It's why I am pretty picky about when I trade it. And it's really because the minute I am overactive in it on a regular basis, I'm most of the time losing. Period. I mean, I wish I could tell you otherwise, but when I get super aggressive this market, it just starts chopping me up, right? And so I really try to stay patient. And so I'll allocate more risk and I'll catch 1 or 2, bangers on this thing, and it'll pay for my next 5 or 10 losers, so it's like I don't want to try and over manage NASDAQ. Now S&P, it's different. We'll get into that when I do an S&P show, but for the NASDAQ, it's like, man, I just learned my lesson with it. It comes back. It's so the way that my style is and whatever, and I know some people might be more active than I am. Just understand that if you're more active than I am and you're trading NASDAQ and you're looking for short setups, build the same thing. It doesn't matter what my confirmations are. You need to have multiple confirmations. Make sure you're watching cumulative delta and order flow. It's extremely important. It'll help you become a better executor of your strategy. And just understand the bigger picture environment. Does it make sense to sell a low into a NASDAQ? The only time I want to sell into a breaks into NASDAQ is range expansion lower. If we're in range expansion lower, I'm selling 1 standard deviation NASDAQ because it's worth the risk.
Right.
Because we're making lows. Go back to 2022. It's a different market. Right now, it doesn't make sense. You sell the holes in this market, yep. You're getting beat up, man.
No, that's a good point. That's a good point. You mentioned micro NASDAQs, micro NASDAQ as a viable option. Is this a place where when it's two-way tape, you're using micro NASDAQ a little bit more?
Yeah, I think that honestly, if you're a retail trader with an account, I would probably say, I hate giving people financial advice, but let's just say, if you have a relatively small account, you should be using micros. I think if you have a larger size account, 50K, 100K or higher, you can go to the bigger NASDAQ. But, if you have a smaller account, why wouldn't you use the micros? It's a better product. It's a better product because you can get as big as you want in it, but you're not price sensitive. That's the bottom line. When I look at when CME put out these micro contracts, to me, the micro NASDAQ is a great product for the retail trader because the big NASDAQ, I think the E-mini is too big of a product for most retail traders. There's too much volatility. Our boy Jim Cagnina told me coming in today, average true range around 217. Well, if you look at that on a relative basis, so if you're trading one big contract, you're looking at $4,400, whatever it is, on a regular basis on one contract from peak to trough. So on micros, you've got a chance to hold your position. You can widen your stop. You have a stronger hand in your position. What does that mean? I can widen my stop a little bit. I can rotate. I don't need to be as price sensitive. I don't have to step in. And just because we get to the 1 standard deviation and I'm trading the bigger product, I've got to be in. You can inch your way in with a micro. And the micro actually, NASDAQ is outpacing what it is for the micro E-mini S&P to the E-mini S&P. E-mini S&P is the biggest product out there when it comes to index futures, but the micro NASDAQ has the greatest growth rate in terms of micros, catching up to the volume, if not surpassing the volume within the NASDAQ. So it's extremely liquid as well. And I just think overall, most traders that are retail futures traders should be using micro NASDAQ. Unless there's situations where it's a tight risk and you're like, you know what, I can go to the bigger one. Okay.
Yeah, right now, today, just looking at the volume of trading, micro NASDAQ leads them all in terms of stock index futures.
Exactly.
Yeah.
So I mean, the liquidity is there for a market that's got a super wide range. So it just goes to show you that, this is where the majority of you've got a lot of market makers in there. You've got a lot of traders. So liquidity is there. I mean, and it just doesn't make sense to take on more risk when you can scale into that same amount of risk.
Exactly. Well, thanks for that, Anthony. People want to continue the conversation with you. Where can they find you?
Check out my Discord. It's free. I've been out the past couple of days, not been feeling great. I'll be back in the full swing next week. I put out a free morning note every single day on market environment. People ask me what my strength is. My strength is understanding what side of the market I want to be on. It may be wrong, but ultimately I have the conviction on that side, and I understand, market environments extremely well. And so it really has helped me benefit my day trading, and I put that out for everyone to see for free in my Discord. I've got a lot of cool stuff coming up there as well. You could follow up that conversation with Develop Your Edge. And this show is we're building a whole area for Develop Your Edge in the Discord. So that is in the description, or you could find it at anthonycrudele.com or Anthony Crudele on Twitter.
Awesome. By the way, I've had to report another imposter today on Twitter. That happens. That means you've made it.
I take a few days off from not tweeting because I haven't been feeling good, and they're all coming in and trying to steal me.
That's right. Well, we won't let them do that. Thanks again, Anthony, for another week of great information. Hope you're feeling better, and appreciate my time with you, and I'm sure our viewers do. So want to thank all the viewers for being here as well. And in the meantime, we'll finish the day with Mike Burke. He has some great analysis at bars closing, and wish you all some great trading in the meantime. We'll see you later.